following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Monday morning here in North Carolina. I hope you guys had a good weekend. Futures are down a little bit. And what we want to do here is kind of do a pretty good analysis of the S&P 500 futures, where we've been and where we're possibly going. First of all, I want to start with gold. As we look at this, and I've got my currencies on another screen, so you guys are going to have to bear with me. We got 5 servers going on here with our remote charts, and somehow we got discombobulated and disconnected our currencies on this server. So I'm gonna have to switch back and forth periodically. So please bear with me. I'm looking at gold, and the U.S. dollar's pretty much stayed around that weekly unfair low. Therefore, gold repricing itself up or down relative to the dollar. We've kind of been through that. And we talked about a new profile that appeared last week. And we came down and hit that. And we talked about, taking shots when the battle points are available, especially on gold. I mean, it actually acts very, very well relative to the long-term profiles. I'm going to go back in time here. We're looking at the February contract. The continuous contract is a little more voluminous, so we can get a little more information there. But as you can see, these breakdowns go back and retrace into those former support, now resistance. Now we had a support area. We had a profile up here. We're not changing tone going into another long-term view trend change. We're just having some day trading opportunities or short-term swing trading opportunities, and then trying to use the long-term trend definition to be able to, I'm sorry guys, I've got a credit card company that calls me like every 2 seconds to try to open a credit card account, and I'm going to turn everything off here. So Capital One, anyway, 1060, that's their new tactic, by the way. 1060 was that bounce point and that unfair low predetermined ahead of time, by the way. We reached a low of 1061, and we bounced up. Let's just see, this week we actually rallied $16 an ounce off of that. So, but now the party's over. We went right back up into that almost 1090 area that we talked about was super important. We got as high as 1086. We talked about 1087, 1090 being that kind of target rich environment. We hit it. Excuse me. Let me see where we did hit. I'm sorry. I'm saying something wrong. We hit 1079. So we bounced about, I don't know what I was talking about $19 an ounce off of that kind of pullback and then rally back up. So we're just kind of consolidating down here right now. If we go to the daily, we can see a little bit more price action here. And as we look at this, this is, again, continuation type attitude on this particular product. We got a trading opportunity. We took it. That's great. New selling points have to be breakdowns and daily closes below 1060 for sure. And a weekly close is going to be extremely damning for anybody trying to pick bottoms here on gold. So that being said, and I got a lot to talk to you about today. I just want to hit gold and silver and stay on this particular page before we have to switch to another server here. Man, I mean, this is basically, we talked about the relative weakness of silver versus gold. We talked about things on their lows go lower. We talked about this was not the one to pick out of the basket of possible situations that you could go long. This one's sick. It's now proven itself out to even be more sicker than I thought it could be. 1426.27 was that resistance point after we rallied back up into that 1465. That was, again, resistance based on long-term trend being down. Just like gold, we're taking the major sell opportunities we're taking. Any type of day trade and bounces, we had that little 1060 situation on gold we talked about, but the relative weakness of silver relative to gold, it's been a little bit easier play to short here. And I know you guys who are trying to pick bottoms on some of these metals has been incredibly painful, but we want to try to just, again, define where the trend is and then just continue to sell resistance, in this case based on that trend. All right, got a couple of traders hit me early here. All right, so as we look at those two products, what do you do with silver now? I don't think you sell it in the hole down here right now if you haven't been in this trade. I mean, if you're in this trade, we don't have any new indications, and you should have been in this trade, any new indications of any type of new profiles attempting to appear. I'm going to go to my futures section in our scanner, and I'm going to look at gold, copper, silver right there. Here we are, red across the board here. No new green shoots whatsoever. No new profiles attempting to appear. This thing could continue to go down. All right. So remember that, we want to start seeing some type of change in attitude here when it comes to silver, and it's just not there, So can you pick the bottom right now? Yes, absolutely, that's possible, but that's a very dangerous game to play. We all know that. And Jay, keep your day job. Just making sure you're listening, Jay. Here we go. Dollar, we're going to hit that really quick. Jay, we're going to, I don't know if you guys know about this place. I used to live in Chicago. I'm just going to take a detour for a second. I think it's on Clark. I used to live in Lincoln Park, and it was at that time in my life, man, couldn't have been a better place. Look it up online if you want to feel like wasting time. Look it up. And as you go towards Wrigley on Clark, I think it's on Clark, it's a place called the Wiener's Circle. I don't know if you've ever heard of it. There's a lot of cool places around. I mean, Chicago is known for food. It's the most overweight city probably on the planet, for good reason. Deep dish pizza is not a diet food, put it that way. Or Chicago's one piece of, if you never go to, is it Pizzeria Uno? One slice of pizza there weighs about 2 pounds. But anyway, the Wiener Circle is a place that, you go in there, you order, and they kind of treat you badly. They yell at you and they cuss at you and all that kind of stuff. I'm thinking, Jay, we need to turn the den into something like that. Just a thought. So the U.S. dollar, I'm not a fan of selling this. We've talked about this. Here's the unfair lows. I want to see this thing get back above here, get past the noise level. And what does that mean? I want to go into my scanner. I want to go into the dollar, wherever that is. I think it's right down here. Right there. So we're at the noise level. We're sitting right below that big, powerful inflection point. And what we want to do here is be able to get clean and clear of that area. All right. So, and I'm looking at the December contract, which is the wrong one. Let me get the March contract up here. Very similar. Okay, so let's see here. Okay, so we want to get this thing back above 98, basically, and some change. That's what we're looking at here on the dollar, on the profiles here. Let me just make sure we're on the same page here. Why am I having problems finding this? Here we go. And there's that 98.04 in the March contract. So, and we're going to change, by the way, in the scanner, if you guys don't know this already, on the futures contracts, it's always a weird situation trying to mesh together continuous contract situations from like new crop means, old crop means. We talk about that. So we use the front month as eSignal actually does their new rollover to the front month contract. And sometimes, sometimes the front month contracts aren't the ones to pick, like in the late summer, early fall. I mean, sometimes we might have September beans. the November contract's obviously the one everybody's watching and trading, so we'll go to that. So if you got some questions about it, please feel free to email me. But we try to keep these in the, the contract du jour, the day, the month. I don't know what the French word is for month, but we're going to find out. Okay, so let's take a look at something else here really quick. So that's the deal in the dollar. We're going to take a look at natural gas. I mean, this is something, it is just, let's see, let me get that off of there. Where's natural gas? Here we go. Okay, we're in the January contract here. And this is, unfortunately, a prime example of things on their lows go lower. And we were kind of looking for resistance areas to sell. Last one on this contract was 2.609, and we're sub $2. I don't have to tell you that. And a lot of times before these things reverse, they have to do just incredibly evil runs in the wrong direction and get people out. I don't, with the weather situation that's going on here. I mean, I got the windows open right now in North Carolina. It's 8:15 in the morning on December, 14th. That's insane. And there's a gas furnace right beside me, so it's not on. Very similar situation across the states here. So keep that in mind. And these guys are going to have to sell product no matter what. And the price may continue to go lower, believe it or not. So that's an ugly scene, and I'm sorry to bring that news to you, but it could go lower. How do you trade this? That's basically the question. I'm going to go back to natural gas real quick. How do you trade this? There is nothing to hold on to down here. I'm going to go to the scanner. There's zero reasons to really try to go long this thing. There's natural gas. Look at crude oil, heating oil. Reds across the board. It's been like that. There's no new green shoots. You want to at least start seeing reversals on the 240s. I mean, that's just not happening. And then be able to use the top of that profile on the 240 to try to get some leverage to trade it against the trend long-term down. But there's just nothing there. And can you short this in the hole? No. The answer is no. We're going to take a look at the treasuries when we come back. And I've got a lot of comments about that. Obviously, this is a big week. But, I was walking around. When I walk around, it's Capital One again. When I walk around on my cell phone, there's a recorder, and I'm going to talk to you about that. We'll be right back, guys.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Oh, hi guys. Welcome back to the show. Okay, we finished up with natural gas. We're going to hit crude oil really, really quick here. Another ugly scenario, and we already looked at the scanner, and the scanner's just no green shoots, and this is what we talk about all the time. Let somebody else get in there and swing the sword and burn up some cash trying to figure out where the bottom is. We want to wait for the confirmations on when it's time to start trading against a long-term trend down, or have new profiles appear to give us new fences to lean on to sell this thing. All right. So when I say or, I mean, how can I be wrong when I say or? But as you know, I'd literally prefer to try to sell resistance still on this. And we looked at this, just to give you a prime example, weekly close below powerful inflection points, go back and retest. And man, it seems like yesterday, but that was $10. That was almost 25% move down in crude oil ago, which was only a couple of weeks ago. I can't even believe that's not, for that to even come out of my mouth, doesn't seem natural. The globe's energy supply, incredible. I had a friend in Raleigh buy a Tesla the other day. So it's like, he may have picked the bottom. Rates. Let's get into the 10-year really quick. We're going to hit the S&Ps, I promise, and we're going to talk about the breadth extensively. March contract on the 10-year. So, again, this is not how treasuries are supposed to be acting when they're starting to possibly talk about a first part of a rate increase environment. They do those things in tranches, but this is, we've already talked about how Yellen is and that crew. So the rhetoric is going to be, if they raise a quarter point, I mean, that's actually probably some kind of quantified percent chance that they actually won't do that now because the market's pulled back. And as we know, this market's been on a very drunk party and surviving off of, a zero rate structure for a while. And, as the stock market looks at these, and I'm showing the 10-year right now on the daily, we talked about buying breakouts above 126, 23, 24. We've come back and retested, and I think this thing's actually going to head higher. I'm not a big fan of selling treasuries. I've talked about that forever. We almost hit some targets last week. High 127.10, 127.14 was neighborhood. So, we got the breakout. We made a couple of points here, and we're just kind of in a wishy-washy DMZ here, as I like to call it. And, what do you do with these treasuries now? Even though this is the long-term below the profiles here, I'm actually just terrified to sell these things. So my stop's below 126, 23, 24 on this right now. Just kind of a wait-and-see situation. I don't think, with what's going on, they could actually raise a half a point. And they may not even raise a quarter point. So any type of rhetoric that they're going to be sitting there watching this thing and babysitting it forever in this state of mind is completely possible. But this party's been going on for a long time, and they may be saying, hey, it's only 2 a.m. We're going to keep drinking till 4 a.m. So, the market loves that type of rhetoric, and they love a zero rate environment. So take that for what it's worth. And, the U.S. stock market, the S&P futures, we're going to get into in just a second. Maybe in for a little bit of a short squeeze here really quick. So watch out for that. We're going to hit the S&Ps really quick, and we're going to cut off my cell phone. That's the first thing we're going to do. This is a if you guys ever been overseas and you tell your bank ahead of time and everybody else, hey, I'm going overseas, when you see a charge attempting to come from Kuala Lumpur or whatever, please let it go through. It's probably me. And then when you get there, they've blocked everything. And then, like on Best in Show, you're trying to stay at a hotel and you're kind of trying to figure out what cash you have on you because none of your cards work, and you got to call them, and you're staying in the broom closet. That's kind of what's going on here with the Capital One. Anyway, all right, so we got about 10 seconds before the break. The S&Ps we're going to get into. Here's the daily situation. So I want to really talk about this. I want to talk about the breadth mixed in with this as we go back to our scanner and look at some of these speed dials up here. And we're going to be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. I've got the S&P futures up, and last week, was a nice situation as well on the December contract. It was 2089, but this is the March contract. When we had that key reversal, we talked about some of the daily breadth numbers had rolled over to negative. And I was a little mixed up. I'll be honest with you. I didn't know if there was a ton of edge there. Getting back down into 2045 from that 89 area on the December contract was something that I was talking about last week. Hey, you got to kind of be willing to pick battles when the inflection points are offered like that and put your stops in. And if that doesn't work, we've got to be willing to kind of switch gears, look at some of the changes in the breadth here. Our 60-minute has just been a great barometer for day trading, but this daily, when we talked about the VIX increasing in value while all this was going on, and you got to be willing to go down into shorter term time frames. Why is my pointer not working? Okay, and shorter term time frames being this daily time frame relative to the weekly time frame. So we had our middle ground start evaporating, and let me just get rid of this for a second. I don't need to get rid of that. Let me just show this. Hold on. So price action was kind of making new highs here as we were decreasing in the middle ground, evaporating the stocks in the balanced area. The conversion started happening, and then we started really looking a little bit more shortish here. But at 2045, our weekly breadth in a high VIX environment, you're going to have a little bit more play in these long terms. And I was still concerned that we could bounce off of 2045 on the December contract. So we switched to the March contract. in the middle of all this, and I got stopped out on the 2045, and that's okay. All right. Picked up some decent points from 2089, but them's the breaks when in trading, and you got to be willing to just say that to yourself. Taking hits, small hits, is a part of the game, and as we change gears with this, you've got to be willing to also change gears in your trading mentality. So getting stopped out and then going in the other direction sometimes is a very difficult thing to do, because you're like, wow, now what if I get stopped out the other way? But you know what? You're just playing the odds. That's what you're doing in trading. And we had this big mega day, which changed everything Friday. And then we had this morning a big rally back up into that daily unfair low 2021. I think we reached out at 2020, rounded off. And now we're back down, 25 points from there this morning as we rally back up into that inflection point. So what I'm trying to say is all the breaths now are negative, and we're back in the middle of a fair auction with the unfair lows ultimately on this fair auction on the weekly at 1953. But let's just kind of figure out what we're going to do today. The tone has changed a little bit. The breadth has changed on the long term, even in a high VIX environment. And we're sitting down here right now at 2,000, right? So what do you do with this now? We've come down, 5% from the recent highs, basically, is what we've done. We've come down 100 points from 2,100, let's call it. And we've done that in let's see, 1, 2, 3, how many days? A week and a half. So as we look at this, for day traders, you've got a big POC on the weekly, which in a wide profile is very, very important at 2002. You got the 240s sitting at 2001. So let's go into the scanner for lows at 2001. So let's go back to our futures section. And all of these are in the breadth charts. Let me go back and show you that real quick. So here's our 240. There's that bottom 2001. Here's our weekly POC, as you can see there, 2002. So coupled with 2000 being a big psychological level anyway, let's go into the futures section. Let's look at the S&Ps. Right there. There's that. We're sitting in the vicinity here, and we're also at this POC right there. So, what do you do with this now? I'm not a big fan of selling this right now at all. If we can get back above that POC 2002 on the weekly, you might have some day trading opportunities, but the tone has definitely changed on this thing. So I think the opportunities to think about, and I'm going to get back to my breath here, the opportunities to think about getting long in a big way are probably not there. We've got a big announcement this week. The market's going to be all over the place. And I think just the fear of, what she might or might not say is going to be baked in the market. There's going to be some pretty decent volatility still. So there's some great day trading opportunities. You're going to have to keep your eye on the major inflection points and just trade against them. And I think those major inflection points right now are around 2,000. Got three things in your favor there to lean against: the psychological value, the POC on the weekly, and a wide profile, which is pretty big. And you've also got a 240 unfair low to lean against there. Crude oil is obviously not helping this situation. The notes and bonds kind of sitting on the launching pad to possibly go north is not helping this situation in the short term. But in the long term, think about it. We talked about the 2 a.m. Everybody's not finished drinking yet. The Kool-Aid on the hesitant rate trigger. We could go into 4 a.m., and the market more than likely will like that. All right. So just be aware of that, even though it's basically saying we don't trust what the numbers are. I mean, it's a rigged game. And as a trader, sometimes trying to make sense of these things can get you into trouble. You just got to trade the technicals. So that's where we're at with this right now. Again, the breadth is basically telling you that it's kind of still okay to be short, not okay to be long here, but you might have some trading opportunities in the short term which we've already had this morning, getting back up into 2021 and being able to short that figure. But the rest of the crowd today might be able to quantify 2,000 as being some kind of a floor on this for just the interim. So you might have a range between 2,000 and 2021. Anytime we get back above 2021, we're probably going to have some shorts start to cover. So just watch out for that. If anybody has any questions, please ask them in the den. That's what I'm here for. Or call in. Would love to hear from you. All right. So I'm going to go to a different server here. It's got some currencies on it. And I hope you guys are seeing that. Did everything switch okay with my screens? No news is good news, so I'm going to keep going. I hate it when a lawyer tells you that. It's just, I hate you guys. You guys have already heard that if you've ever had a lawyer. Daggone it. All right. Okay, so we're back here. I'm going to redo my screen here just to make sure you guys are seeing this. All right. So looking at the euro, we're just going to keep going down the usual suspect list. Not a lot of change here. Again, I've got to see this thing get back down below 109 to really start feeling hunky-dory about getting short the euro again, or just let it rally up into 113.5. I know that's a big range, but that's what I'm looking at. I don't feel like there's a lot of edge here trading the euro, so I'm just staying away from it. The carry trade, the yen is just continuing to collapse. Don't see there's a lot of edge there. Here's the situation in the scanner on the yen. I'm going to go to my Forex section, and I'm going to look at this one down here, USD JPY. Not a lot. I want to start seeing yellow peelbacks here at the very least, even start nibbling on this, but I think this trade's over for a while, so you got to just kind of sit on the sidelines on this one. Your broker's ready to kill me. I'm telling you not to trade. The Australian dollar, this is something we've kind of used again to bounce off of here. I think this 71.69, 71.70 is a big number. I'm still willing to try to pick some longs around there with stops down below, and we're rallying off there pretty decently right now, actually. Canadian dollar, we've been talking about this is probably the best trade on the board here. It's just had an incredible move up. We don't have any yellow bars starting to appear here on the Forex section. I'm going to go to my Canadian dollar, right? Let's see, where's it at? Where's Canadian dollar? Oh, my God. Here we go. All right, so greens across the board. There's no new hints of any breakdowns happening. I don't think this is something to short yet. Crude oil is going to have to really turn around, and some other products, natural resource products, for this thing to. Man, I'm ready to go to Canada and just yip it up there right now. This is a stark difference from par at this stage, but you'll start seeing changes. Yellow peelbacks start to happen in the cells on the Canadian dollar when you start seeing a hint of some new profiles appearing, and that's what I'd like to see with this. To start playing around with this again. This has kind of been a runaway freight train on the long side. There's really no reasons to take it off. So that's what I'm looking at on the Canadian dollar. All right. One more trade we've been following pretty intensely, the ruble trade. And this is something we've been talking about. There's really no reasons to take off the long trade here either. And as it stands right now, we're breaking out again above 69.82. If you haven't traded this before, this is getting really, really interesting. And if you can find out how to trade this, or maybe Interactive Brokers, you can trade it. I'm not sure. Man, I got a postcard from them the other day, and I'm just appalled that they can take on the risk of those transactions for that type of price. I mean, it's just incredible. It's amazing. There's risk in doing a transaction, and I don't even. I guess they know what they're doing. Supremely know what they're doing. All right, so we're going to go back to our futures board here. Switching servers again. The Chinese yuan is getting devalued again, even though they think now they're going to meet their 7% growth target. But, what does that mean for your trading? They're continuing to do the tricks of the trade that we enabled them to do, thinking wise, printing money and doing things they need to do, I guess. But what they're talking about meeting 7% growth targets, they're still kind of stepping on the gas pedal with the devaluation. This whole world's going to be in inflation crazy mode if these commodities turn around. I mean, ridiculous inflation mode. I know you guys have already thought about that. All right, we're going to take a look at, and the Rand had a massive reversal today already. I think Basil is probably aware of that, being from South Africa. And we're going to take a look at one trade that I was kind of interested in. XLY is taking seemingly a massive pullback in the index to even have this thing start breaking down. I did that Bloomberg report on it. That obviously helped, but I mean, I'm not exactly tickled about this. I thought this thing would go a lot lower. 79.43 now is going to be resistance on the XLY. I'm going to go into the scanner and I'm going to go into my ETFs here. And I'm going to look at my daily grid. Obviously, there's a lot, every major ETF is getting hammered. But I'm going to go into my XLY. My breaths have been relatively negative on this thing. And that was a really, really decent trade. When the breath turned negative on remember the VIX is kind of predicating what dials that you're looking at here. And the similar situation with the market, the conversion over, the relativity of the breath changes relative to the S&P was a little bit more leading than the S&Ps, and that's what I was speaking about in that article. And one thing I got to tell you about we're doing, which is way past due, next upgrade, couple of days, we're not only going to have this landscape chart for instruments, we're actually going to have a price chart just like we do with the breadth charts, which is going to give you the levels painted on an actual chart but not naming any prices. So we're still going to stay away from the exchange outputs that are indexing prices, but you're going to be able to see a chart of a price chart, so to speak, of the underlying instrument with the boxes painted on, or the profiles painted on there, which pretty happy to say that. Finally. All right, we got about 15 seconds before the next break. When we come back, we're going to take a look at a couple of custom sorts, try to find some stocks that are holding up in this pullback and identify those and try to figure out how we're going to trade them for this week. We'll be right back, guys.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show. We've got about 4 minutes. We're going to try to hit a couple of stocks here. I just went into, by the way, if you've got the latest, we're going to come out with another version. It's actually going to clarify some more things in a day or two and have those charts in here. Instead of the landscape charts, we're just going to have the icon basically give you a price chart just like this and paint the box on there, and you'll have all the levels and all that kind of jazz, which will be cool. We have an entire charting and execution package that we wrote that we just keep delaying. There's a lot of moving parts in that thing, but it'll go in tandem with this too. It saps off the same database, and we're gonna roll that out extremely fairly priced, by the way. And you won't have to pay exchange fees. You won't have to pay exchange fees for that either. We put a section in here. I don't know if you see this. You can kind of take out things you don't want to see and kind of compress this thing. If you don't want to see the contract, if you don't want to see the instrument, if you don't want to see the exchange, and if you don't want to see the chart, blah blah blah. So we put that in there so you could, if guys who don't have the real estate want to compress this over and still have the views. But I went down, and by the way, you can create, like, this thing defaults if you're going into, let's just go to strong uptrend on the S&P 500. Here we go. And there's basically what this particular sort's looking for. It's basically looking for, I'll just tell you real quick, weekly and daily above profiles. This is all the stocks in the S&P 500 meeting this. But if you want to go in here and do custom sorts on multiple exchanges at the same time, or switch gears and just take a look at the the futures or any particular. Let me show you how this works. Take out the S&P 500. Let me just put in the XLF. Nothing meeting that criteria. Amazing. XLP. Okay, so the XLP, and this is when I was looking at Kroger, Procter & Gamble, Tyson Foods. So let's look at Tyson Foods, TSN. I pulled this up, and it's obviously, and let me just pull up the XLP really quick. Here's the XLP in general, consumer staples. Here we go. Not a bad view here. The XLP coming down into support. Got to keep this in mind. The group in general looks relatively well and hasn't broken down. But when I go back into Tyson Foods, TSN, this is one you probably should have on your radar screen. I mean, I know you're going, well, thanks for alerting me to this unknown fact that Tyson Foods has been going up like a freight train. But you're coming down into some support here, 52.16. Got a little bit of an entire DMZ down to 49.50. This is kind of the strength of that XLP, and that's not a bad group to be looking at right now. It's kind of a safety play, obviously. But as we look at that one, Kroger, we're going to pass on. Procter & Gamble, we're going to take a look at that one. And these are ultra strong, but I've got another sort. I got that on the XLF. Let me switch that. Man, I love this software. I love it. You can get down to business really quick. Procter & Gamble PG. Let's just take a look at it, PG. So this is kind of the anti-stock. I used to, you're looking for safety in times like this. And if you're doing trading, especially trading with the specialists back in the old days, this is a stock that very interesting to trade in times like this, right? And a lot of people know it. So, God, man, we're out of time. Ugh. I wish we could go on for another hour. Larry's next. I think he's transmitting from Philadelphia today. Stay tuned. And we'll pick it up again tomorrow, guys.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.